Okay, good morning, everybody. Good afternoon, depending on the time zone you're in. Today is Friday, September 16th. This is your weekly take on the market. It is around 12 o'clock Eastern time, 9 o'clock for me. I have a prior appointment later today, so I need to do this video a tad bit early. I always prefer to do it at the end of the market on Friday, just in case, kind of get everything, all the ducks aligned. But unless we have some kind of massive change in the market, my thoughts, I just don't see how they would be any different 3 hours from now. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Here is the disclaimer. We are not licensed at Investors Business Daily. No one is. I'm not. I don't believe anyone is. I'm aware of. We don't provide buy, sell, hold recommendations. Really, our sweet spot, our circle of competence is research and education. So take a moment to read the disclaimer. Okay, so most of you know the drill. We go through the market indices. I'll show you a few charts and a few thoughts that came across my desk through the week. We'll talk about the industry groups. Is there anything of interest? It's mostly the same. And a few stocks that are on my radar, stuff that I'm watching, stuff that I think is highly influential to the overall market. And then I have a quote of the week. So I know some of you might be new on the free access, might be the first time you've seen this video, but that's kind of the process that I go through. So let's start with some thoughts. This came across my desk today. It's Stanley Druckenmiller, who ran hedge fund for a lot of years with George Soros. Legendary investors, on the Mount Rushmore of investing as far as returns and assets under market. So the type of returns that he had with big money, there's very few that have done it as well as him. There are others, but there aren't a whole lot of them. So, when he talks, I like to listen. He don't have a crystal ball, or he doesn't have a crystal ball, but I like to see how he's thinking about the market. So it's really what the objective is. How are these guys that have done it really well thinking about the market? What's their process? He thinks there's a high probability the market will be flat for an entire decade, something 66 to 82 like. And I'll pull up a chart of the market from 66 to 82 in a second. Now, the problem with this is, how does it get there, right? Does it get there in a straight line? Does it just go flat like that for a long time? That wouldn't bother me at all, because there will be great companies, great stocks out there, people that are outperforming, that are doing amazing things. And if the market is not a factor, you don't have that kind of market tailwind, but you don't have the headwind either. So I think that would be fine. Now, if it goes up 20 and down 30 and up 20 and down 30, that would be obviously a little tougher. Again, you don't know. So it's just food for thought. I will preface that even he admits it. He's almost always been macro bearish in his career. So this is something I like to think about. I think about the macro, but I trade the micro. So macro wise, as I sit here, everything bothers me. The world just does not look very strong, but I've always thought that at market lows. So I don't know if this is a market low or not. In 08, 09, I was bearish the whole way down. I was right until I was wrong when the market turns. You have to kind of be flexible to that. So I'll always be probing, looking for ideas, trying to see if anything starts working. I think that's the best strategy. Just let the market kind of pull you in. So let me pull up the chart from that time frame. So, and let's go to a monthly. So this is 66, somewhere in here, and the market peaked, at least the Dow, although it did make a higher high here in 73, but with a lot of chop in between. But really, there's the peak in 66. This is the kind of market we like. You see that kind of steady uptrend, sideways, steady uptrend, sideways. bad break, but then a steady uptrend. These are the kind of markets you really can make good money in. Remember, this is a monthly. So this is, this is a 2.5-year bull market right there. So you just have a lot of back and forth, down, slight up, down, up, that bad down. It's probably a market you can make some money in, 74, 75, sideways down, and so on. So, these troughs aren't all that bad, although maybe that's, these are probably 25, 30%. But at least you're getting some kind of rally back. And so that type of market, I think, would be fine. I don't know but then ultimately, in 82 was the start of a massive bull market where you had that tailwind. So go back, study history, think about kind of how you want to position yourself, what type of investor you are. If you're a short-term investor, this is gobbledygook. None of it matters. If you're a long-term investor, then it probably would matter. You probably want to think about this, because there are periods in stock market history where, the market, doesn't give you anything. I know the average is 7 to 8%, but that's the average, right? What's the old joke that the 6-foot man that drowned in a river that was 5 feet on average? So the averages it can get pretty bad, down 30%, up 20, down 12, up 17, and you average 5%. So yeah, everybody can kind of understand that concept. All right, so we're in the month of September, which most people don't realize probably that September is actually the worst month in stock market history. February and May are slightly negative historically, but September's 1%, real bad outlier. So most people think about October being the worst month, but really the bad action historically occurs in September. You get some carryover into October. That's why people remember October, the crash of 87, the crash of 29, they were in October. But the bottom is usually sometime in October. So cyclically or on the calendar wise, we're in the teeth of a really bad market period. That doesn't mean it has to occur this year, but so far it's kind of held to form. Early August, the market was strong. And now, so far it's having a hard time hanging on. September's been pretty brutal so far. The famous quote by Mark Twain is, I think he starts the quote with, October is a peculiarly dangerous month. That's a terrible word. I shouldn't have put that in there. Along with November, May, June, and he mentions all the months. So, but the one thing about this chart that's really, really interesting to me, and at William O'Neill under their money management, the in-house money managers, they've charted this as well. And the stair step from October, November, December in performance, they have that same type of performance on their in-house money. So their last quarter is their best quarter historically over many years of running in-house money, and their best month, at least when I was there, and was privy to the data, was in December. They did really, really well in December. And there was a couple of Decembers where they had home runs, specifically December 99 comes to mind. I wasn't there in December 99, but I do know the performance. So if we can just get through this, we have an area where it might be able to participate, make some good money. Sentiment is key. It's not great for predicting turning points. Just gives you an idea on how people are thinking. The bulls bears, which is the investor sentiment that's printed. This chart is from Investors Business Daily's website under the psychological indicators. And it's just an overlay of the newsletter writers that are bullish versus bearish. And usually more people are bullish. That makes sense, right? So when you get a crossover, and that's what those blue arrows are mimicking, that's when you get more bears than bulls. That tends to portend to a market rally. These blue arrows, there's 3 of them on this chart. It's been a long time, if ever, that I've seen 3 arrows on a chart. This is usually a very good signal, but it's a very infrequent symbol. Doesn't usually happen that often. So I'm starting to think that maybe this isn't so valid anymore, because not everything is going to work in the stock market. So we've had 3 signals on this chart in the last 2 years. We're very close, possibly, to a 4th signal, and it's been very, very rare that you get that signal. I've seen periods where there was no blue arrow on the chart. It just was, just nothing, no signal at all. So maybe sentiment is going to be bad because things have changed. The market has changed. Possibility. AAII, which is in individual investors. Again, they should be mostly bullish. You can see that they are pretty bearish, 46%, but they were much more bearish last week at 53. And the historical average is around 30, but it's 46 now. So it's a little higher than normal historically. A lot like the previous sentiment indicator. It's not. It just hasn't been working that well this year. They've been more bearish than normal for a lot of this current cycle. All right, let's pull up the before I go into the industry groups. Let's pull up the index charts on a current time frame. So here's the NASDAQ, and this is intraday. The market's not closed, but we gapped down today on the FedEx news, and we've undercut these lows. It's just been ever since the CPI came out. This is that, I think. Oh no, I'm sorry. The CPI came out here. So you had a little bit of a rally into it, hoping that CPI wouldn't be bad. CPI was bad, and that was the really bad break. But you can see the market was already in a downtrend before that. So Mark Minervini was on our webinar a few days ago, and it is called, if it looks like a duck and walks like a duck, it's a duck. It's a bear market. We're in a bear market, unfortunately. That's actually the good news and the bad news. The bad news is we're in a bear market. The good news is I think the bear market's been going on for a long, long time. If we look at a weekly chart, the NASDAQ topped almost a year ago. So we're approaching almost a year on the index. But I'll tell you truly, most really good market observers will tell you that the market topped in February of 21. So we're approaching, almost 2 years, 20 months or something like that. This is the ARK ETF, Fidelity Contra, which is a really good fund, topped when the market topped in November, but some other ones, is it LGAWX, Lord Abbott, LAGWX maybe. Yeah, so Lord Abbott, no surprise, topped February 12th, right around the same time as ARK. PRNHX, which is T. Rowe Price New Horizons, November. So it made it a little bit further. You can almost say that it topped a little bit sooner in September, made a tiny bit of a higher high. Here's the February top at 73. So it went a little bit higher. 10 divided by 73 is, 13%, nothing to sneeze at, but now it's, it's down from 85 to, what's the current price here? 52. So roughly 35%. So there's been a lot of damage in these type of, growth stocks. So growth stocks have been in a bear market for a long, long time. Then let's go back to NASDAQ. My gut instinct is you're going to get some kind of test of this low. What does a test mean? It means it could come to here, it could come here, or it could go there, and see if it can rally. And if it can't, most of the time when you undercut a low, you get an attempted rally. See that attempted rally? Undercut a low, attempted rally, even better, right? Undercut a low, attempted rally. Undercut a low, really good rally. So I really hope that it undercuts that low, and then you can kind of set up for a rally. Let's look at the S&P. So long way away, undercutting that low, but we are undercutting these lows. So maybe, who knows if that's enough. The bond market is represented by the TLT. So it undercut that low already. So it undercut the low right there where the market made its low. Gold, although I don't know what to think of gold. Gold is just like the craziest thing in the world. But maybe it's a proxy for risk on, risk off, something like that. It undercut a low as well. And then there are a lot of stocks that have undercut those lows too. Let's just jump to them rather than go to stocks to watch, but like NVIDIA. So NVIDIA undercut the low right there and can't rally. So it thought about rallying, it tried to rally, but it can't rally. And so NVIDIA, what else is undercut? I think Google undercut the low today, 101.88, and today's low is 100 and change. So Google undercut its low today. Microsoft, I think it's barely missed. So 241.51, you're at 242.78, pretty much stay low. Looks like it's probably going to undercut that low. So you're getting a lot of divergences of stocks that are acting a lot weaker than the market. Apple hanging in there, a long way to go before it would undercut that low. Amazon hanging in there as well, about 20% off the low there. And you know, the best stock as far as the huge mega caps, Tesla, you know, a million miles from undercutting the low. 200, 300 down to 200 would be a long way, 33%. So there's a lot of divergences out there as far as the market, but the overall, most of the factors are leaning towards being cautious, protective, waiting for the right setups. There are some setups, and energy seems to be the best area, but you can find stocks that go up. It's a hard time finding stocks to stay up. Let's jump to the industry groups, and then we'll go to other stocks that I want to highlight. Okay. So the best or easiest way to find the industry groups is with the Open Stock Ideas button up here. Click on Open Stock Ideas, jump to weekly review. We have a daily review, we have a weekly review. What's the difference? You know, this is kind of a best practices, to be honest with you. If we're in an uptrend or we're in a correction, it's during the week, it's on the weekend. I'll be honest with you, I just keep it on uptrend, and I almost always use weekly review. My favorite reports and screens are in the weekly review. So there's the 197 industry groups. Click on that. They're going to show up the very first time you do this down below in alphabetical order. Click on the column header industry group rank. It's going to sort the list. The very worst stock group is gold, silver stocks. I guess not surprisingly, this is like the worst group ever. So you just think that it's funny how, you know, you hear things, but yet the market is diverging from that. So, you know, printing money, we're doing all this. FYI, gold should go up. FYI, gold stocks should go up. And the market does the exact opposite, which is why I put so much weight into what the stocks are doing. All right. So that's the most important. People vote with their money. The big money votes with their money. Follow their footsteps. Let's reverse the groups. Energy Solar is the best group. Oil, Gas, Royalty Trust is 2. Pipeline is 3. I don't think this has changed much at all. Energy Alternative is 4. U.S. Exploration, you can see it made a big jump from 16 last week to 5, but 3 months ago it was 6. So it's always been kind of in the high area. And so these rankings will give you kind of the trend. So Energy Alternative, for example, 67 3 months ago, 4 last week, 4 currently. Retail restaurants, 143 3 months ago, 17 last week, 13 currently. So I'm always going through looking for that type of trend. Is something that was really bad 3 months ago and then was okay or pretty good last week, and is okay to really good this week. if you're in a bull market, by the time, and even kind of in the market we're in, by the time you see that it's number one, energy solar, you're almost guaranteed to have missed the best stocks. So this group, energy solar, broke out right there. If I click on it, stocks and group, what's the best stock? Enphase. Click on Enphase, and I noticed today the market's down and Enphase is up. I think this is the best stock in the market as far as liquidity, earnings, sales, can slim. Does it meet all of the criteria? It's a very difficult stock to trade. It is $300 stock, but it tends to move about, I mean, you know, $10 is just like up and down on the bid. $10 is a normal day for that stock either way, up 7, down 3, and somewhere in between. So you have to understand that if you're going to try to position yourself in it. But it's, you know, it's the best stock. It broke out, it's hanging in there, it's exhibiting amazing relative strength. I guess there are others that are really good, like Suave is holding in really well. LNTH, it's trying to hold in. They're not making progress, but they have a massive headwind, and that's the market. So you want to know, what are the stocks that are really resisting the market? They're not going up maybe, but they're not going down either. That way, when the market changes, when the headwind from the market switches to just maybe even just off, it doesn't even have to be a tailwind. It's just the headwind slows down or turns off. These will be the best names based on history. So, but you just have to kind of wait till that happens because of them. You just don't know with the market environment. You just constantly just be ready. It could be today. This could be the low. It could be 6 months from now. You don't know. You don't have to know. You just have to be ready and be prepared. So some market moving stocks. Adobe. It's pretty bad action. They bought a company, and it really isn't about the fact that they bought a company. It's about the reaction to the purchase. So they used some stock, I believe, if not, I don't think it was all stock, but some stock. And, you know, it's kind of a vote by the company that our stock is expensive. We're going to use it to buy another company. And so the stock got hit really hard, and a little bit of a fall through there. Hopefully nobody's in it. I mean, if you follow our sell rules, it's giving you like 30 of them on the way down. You know, you've got this bad break here. Well, first of all, if you buy it there, you should stop yourself out when you go down 8%. You got a really bad break on the 50-day, that's a sell signal. If you miss that one, you got another one, sell signal. Breaks the 200-day, you get another one, sell signal. Breaks again, makes new lows, and, you know, really late sell signal. And that's what's funny about the market is on the way up, what's too high or seems too high tends to get higher, and what seems too low tends to go lower. So if you bought Adobe at 670 and it's 530, you must think, well, I've missed my chance to sell it. And then it's 500 and you're like, boy, I'd love to take 530. And then it's 415 and you know, 500 was a great price. And now, you know, then it's 330 and it's like, you know, if I'd only just taken 400 and change. And then when it gets back there, a lot of times we don't, you know, if you play that game, you don't take it because you're hopeful that it'll go back to 500. And, you know, now it's at 300. You know what most people do by this time? There's a reason there's amazing volume footprint here. Is at some point the pressure just gets to you, everybody. I don't care if you're a professional or not. And you just say, uncle, and get out. And that's kind of why you get these huge volume footprints like this, because retail professionals are they're just uncle, just get me out. Just don't want it on the books anymore. I can't sleep at night. It's just, every time you open up your stock account, you could have 8 good stocks doing well, and all you'll look at is Adobe all day long, you know, down X amount in your account. And honestly, what would probably happen is Adobe would swamp all the gains you have in the 8 other stocks. So you could be right 8 out of 9 times and be down or unchanged at best. You'd be lucky to be unchanged at best. If you allowed something to go down, what's this down, 60%? Yeah, 57, 58. So if you're going to buy individual stocks, use a stop. use a stop no matter what. FedEx is kind of the catalyst for today's weakness. It's kind of hard to see because the EPS box is covering it. Let's go to the weekly. But here's FedEx. FedEx is a huge company. It's down 40%. This week alone, it's down 23% for the week. So is there anything holding up? Very little, but it's almost all energy. EOG is holding up, building this cup with handle. It's got earnings and sales. And if I open up this panel here, let's go to owners and funds, and you can see it's actually got sponsorship. MFS Growth has a position. Fidelity Contra has a position. Not only does he have a position, Will Danoff is the manager of Fidelity Contra, but he's improved or increased his position for the last 3 quarters. That's what that is. 0.48 million, 480,000 shares, December 21 quarter. Following quarter, he was up to 1.9 million shares. Following quarter, up to almost 3 million shares. So he's adding to his position. So that's a potential idea. VAL is building a handle today. So on a weekly, you've got the cup. On the daily, you've got the cup. But if we get 1, 2, will this qualify on a weekly? You'd need pink here. If this turned out to be pink for the week, this would probably create a handle. For the daily, we need 5 days at least. So we're 2 days in. As long as it doesn't make a high up like that in 3 more trading days, you're going to get a handle with a pivot of 60. So this is kind of where all the best names have been. Shipping has been really strong. Scorpio, FRO, TNK. These are all the best stocks, but they're extended. So, you've kind of missed the buy points on these ones. But if you were paying attention, if you're looking for relative strength, these are names you could have owned. And, it's up 22% in 7 weeks. So there's stuff out there. It's not great, but it's not impossible. And so I could envision where, you could be 30% invested. Maybe you own 3 or 4 stocks and you're 30% invested, something of that nature. So I can't remember the last time. I don't even know if I have been full long on margin this year. It's unlikely. I can't recall if I've done that. Because it's just the market environment won't allow you to do that if you're, if you have some kind of risk management, portfolio management techniques. I think that was all for the stocks. So let's go to the quote of the week. And it's from Anthony Bolton. He was a fund manager with Fidelity in the UK. He managed kind of the Fidelity, I think it was called Special Situations or something like that. But basically, in the UK, he was kind of the UK's version of Peter Lynch. Peter Lynch is the guy that ran Fidelity Magellan for not a long time. I think maybe 12, 15 years, but has a tremendous track record and wrote a couple of books about how to think about the market. And Anthony Bolton has a great quote that he stole from Peter Lynch. He says, "My philosophy is the more ideas I find that are their way to me, the better. The way I like to put it is that I want a wide net." What made me think of this quote was Mark Minervini, who said he wants to cast a wide net when he's screening and then whittle them down himself in the webinar that we did the other day. As my former colleague Peter Lynch once put it, if you turn over 10 stones, you might find one attractive idea. If you turn over 100 stones, you might find 10. So turn over 100. That's the idea. Put in the work on the weekends, once a week. Run your screens, RS line new high, the Mark Minervini templates, if those interest you, the Growth 250, the William O'Neill screen. There's a million ways to generate ideas based on your investing philosophy. And you really want to look at, 2, 3, 4, 500 stocks a weekend. They're not all going to be viable. They're not all going to meet your criteria. You should kind of have a mental checklist where it's very easy to see, oh, I'd pass. Oh, wait, that's interesting to me. So it might take you an hour, it might take you 3 hours, but I think once a week on the weekends, ideally, if you can, it's worth it to put in that work. And that way, when the market turns, whether it's next week or next month or next year will be here much sooner than we realize. You know, we're almost into October. You'll be ready. You'll be ready to go. Okay, so our contact information is marketsmith@investors.com. That's the easiest way to get a hold of us. 800-424-9033. Thank you, guys. Have a great weekend, and we will talk to you next week. Bye-bye.